SAP FIco consulting is most demanding jobs in today's market. FIco consultants will perform various tasks as per company requirements. To perform all FIco related activities, everyone should have accounting knowledge. Of course, accounting knowledge to consultant makes his job easy in his day-to-day activities. Today, I'm going to speak the least basic accounting knowledge required to understand and learn SAP FIco. If you know more than this, that's an advantage for any SAP FIco consultant. Okay, let's see what every organization in the world will do. Every organization to run its business sells something to someone, buys something from someone. Organizations have expenditures and revenues like telephone expenses, office rents, electricity charges, salary to employees, etc. etc. These events happen in every organization on a daily basis. Selling, buying, expenses and revenues are events for business, and these are called potential transactions. Every organization will keep a track of these events or transactions because it will help to have a control on a business, and also it's a legal requirement to report to government. These transactions or events will be recorded with the journal entries in accounting books by using GL accounts. These transactions are monetary based. Money will be involved in this. So each and every GL used in transactions will have a balance on a particular date. So from all journal entries we get GL balances. From these GL balances we create trial balance statement on end of period. Trial balance will show all GL balances on a particular date. By using this trial balance statement we create profit and loss account and balance sheet statement. This is how financial statements generated in organization. So this is main flow of data recording. Before we go ahead, we post journal entries by keeping an organization perspective. Most importantly, in every transaction there should be at least 2 lines. At least 1 line in debit side, at least 1 line in credit side. Debit lines should match with credit line in every transaction and all circumstances. Now let's discuss about golden rules of accounting. This is most important in accounting and bookkeeping. There are 3 types of account. One is real account, second nominal account, third personal account. The real accounts are the balance sheet accounts, balance sheet items. It is also called as permanent account. Examples for real accounts are cash account, furniture account, machinery account. All these balance sheet accounts, balance sheet items. These items will have a debit balance by default. Counting rule for real account is we debit for what comes in. That means here we adding value to existing account balance. So that's why we are debiting. Debit what comes in. We are crediting for what goes out. When something goes out, that means we are reducing values from existing account balance. So we are crediting for what goes out. Let's take an example. Commission paid by bank account 3,000 rupees and by cash 4,000 rupees. Here commission account is an expense account because it's expense in nature. We use bank and cash account, which are balance sheet items and real account examples. Bank accounts and cash accounts are used for making payments. Here amount paid through cash account and bank account. Amount goes out from cash account and bank account. It reduces the value for cash account and bank account balances. So we are crediting these accounts. Let's talk about second example. Here commission received by bank 3,000 rupees and By cash 4,000 rupees. Again, bank and cash accounts are examples for real accounts. Here we are receiving amount means we are adding value to cash account and bank account balances. So we are debiting cash account and bank account. And commission account is a revenue account here, so we are crediting commission account. Second accounting type, nominal accounts. Nominal accounts are also called as temporary accounts. Nominal accounts are the accounts that report revenues, expenses, gains and losses. Counting rule for nominal accounts: debit all expenses and losses, credit all incomes and gains. Let's take an example. Rent paid by cash account rupees 2,000. Here, as we discussed earlier, cash account is a real account and rent account is expense account in nature. That's why rent account is an nominal account. It should be debited because it's an expense account. Credit cash account as being real account, amount going out. Look at next example here. Commission received by cash rupees 1,000. Here, cash account is real account. Amount received means cash comes in. It should be debited. Commission account is here a revenue account. Should be credited. I hope this explanation made your understanding more easier. Now last accounting rule, personal account. These accounts are related to individuals, firms, companies, etc. etc. We quote examples for personal accounts are debtors, creditors, banks, outstanding prepaid accounts, accounts of credit customers, accounts of goods suppliers, capital accounts, drawings account, etc. etc. An accounting rule for personal account is debit the receiver, credit the giver. Let's see an example. Goods sold to Mr. Ramesh worth rupees 1,000 on credit. Here Ramesh is receiving goods, so we are debiting Ramesh and goods account is crediting for 1,000 rupees. In the next example, goods purchased worth of 2,000 from Suresh. Here we are receiving goods from Suresh. Suresh is a giver, so Suresh account should be credit. Goods are coming into the organization, so goods account should be debited. Here I would like to clear one more thing. Whenever you prepare journal entries, we should keep in our mind that it should be prepared in organization perspective. That's more important. We should think what is an organization status in the transactions, whether it's earning money or spending money, whether it is purchasing or selling. I hope now we learned how to post journal entries, and I also explained to you how finance team will convert these journal entries into trial balance to profit and loss account and balance sheet account, and these are the financial statements. This is how organization will reach its goal in recording these data. Thank you for joining me in this video. Please comment how do you like this video. Let me know if you have any question. I will reply in comment section or make a video on that. If you support me, I will make whole FICO training videos for everyone in this YouTube channel. To support my efforts, please share this video with your friends.